For the first time in the last 10 years, we're starting to see interest rates rise. Now, this is completely normal over a longer term economic cycle, but I've been getting so many comments, questions on calls, on strategy sessions, through YouTube and all the social channels. So I thought in today's video, I'd address head on what's happened in the last 50 years, what the likes of the big banks and the best analysts in the world are forecasting and expecting for the Australian property market, not just in the next 12 months, but over the next 4 or 5 years as interest rates ebb and flow during that period. Now, I think the trickiest thing about the current market and interest rates is just the excitement from last year has turned into a little bit of fear. Now, what happens is when we go through a period of 30% price growth in 12 months, off the back of, in some markets like Sydney and Melbourne, almost 100% price growth between 2011 and 2022, certain markets need to pause. We cannot continue to get that sort of run indefinitely. You overlay inflation at the moment as well, and the government and the Reserve Bank of Australia simply have to pull the handbrake a little bit. Now, one of the ways they pull the handbrake is through controlling the media, scaring the shit out of all of us, and that will have a dampening effect. The other way they do that is through tightening lending, and the third way they do that is through either pulling interest rates up a little bit to slow things down, or actually lowering interest rates to speed things up. Now, this has been happening for the last as long as banks have been invented. It's the manipulation and control of money to either allow things to run for a little while or to pull things up. What's been difficult at the moment for many people, and many of the questions I've been getting with this interest rate stuff though, is what's going to happen next. There's just so much uncertainty, and because for the last 10 years we haven't seen interest rates go up, there's a lot of fear and there's a little bit of panic in the market or something like that at the moment. Now, Sam, who's behind the camera, and I were talking this morning about this, and that fear may or may not be warranted, but what I think's happening actually is 2 years of extreme stress around conflicts, COVID, flooding, bushfires, interest rate, election talk, and people have just gone, I'm fucking exhausted. Like, there's just this natural pause in the market. We've also seen crypto markets come back. We've seen a massively overvalued NASDAQ come back to earth and prices drop there. And all of this uncertainty for people that don't understand long-term cycles and that don't read charts is creating fear. I'm seeing things coming out at the moment, not from the banks or not from the RBA, but from punters online, where they're forecasting 15, 30, 40% drops. The same guys were saying the same thing 2 years ago when prices went up 30%. So I want to sift through all of the bullshit today and get really to the source of what's going on. Now, if we start with CBA, there's mixed reviews. We've got to remember Australia isn't one market, and if 70% of Australia's real estate value and transactions occur in Sydney and Melbourne, that any increase in prices in those markets or decreases is going to affect the Australian overall performance. Now, their expectations at CBA are that we'll end 2022 flat. In fact, they think that the likes of Sydney and Melbourne might come backwards a little bit this year. The likes of some of the other markets, like Brisbane, for example, could end the year about 7% up on average. Now, if we think about things in real terms for a moment, interest rates have gone up by a little bit in the last month. Obviously, as a result of the inflation figures being higher than we expected, they need to pull the handbrake. If you've got a $500,000 home loan and your rates went up by 1/4%, then we're talking about a $1,250 per year difference in the cost that to pay the interest on that loan. Now, I understand that as interest rates come up further over the next 6 to 9 months, we might be seeing interest rates sitting at 1.5%, potentially 2% up from their extremely low 2%, 3% base. But even a 2% increase in rates would only result in a $10,000 per annum increase in the repayments on a $500K loan. What's important that I'll get onto in a minute that's not being reported is many households in Australia have the largest amount of cash in the bank that they've had. Many people in Australia's properties have gone up in the last few years. and the debts have come down, many Australians are up to 2 years ahead of their repayments. According to CBA, we've never had so much cash in offset accounts and redraw. But the other thing that nobody's talking about is wage growth is going up at the moment. I talked to a client in the IT industry who's a consultant that just put his wages up for his new contract by 15%. I talked to another client who's in the insurance industry. He just had an out-of-cycle increase in wages of over 10%. All of my friends in the construction and trade industries have all put their pricing up by between 5 and almost 50% in the last 12 months as well. And most importantly, rents for the first time in many parts of Australia in the last decade are going up. So if you have 500K debt and your rates go up by 2%, so it costs you an extra 10 grand a year, according to CoreLogic and Simon Pressley from Propertyology, rents have already gone up $100 a week last year, 2021. They're expected to go up another $100 a week in Australia this year and another 100 a week next year. So as those rates naturally increase with wages and rental growth, it's going to be almost within 2 years from now, exactly the same as it is in December 2021 in terms of like the overall affordability of property. And nobody in Australia is talking about this right now. It is completely unreasonable to expect or to think that heaps of people and properties are going to come flooding into the market. We're actually at the lowest rate in almost 30 years at the moment in terms of foreclosures on properties. And with that cash in the bank and the rising in some of those things I mentioned, according to Simon Pressley at Propertyology, it's almost preposterous to think about a massive fire sale of properties like so many people are saying online. That said, some people will get burnt that are over leveraged, that are indebted, and those people, you know, effectively as the water was starting to drain anyway, were going to come unstuck. Now, one of the things that I love about this incredible world that we're in is there's so many people that are so clever, that have such vested interest in understanding what's coming next. And you can look at Macquarie, Westpac, NAB, ANZ, CBA in Australia. You can look at CoreLogic, SQM Research. You can look at Phil Anderson, Simon Pressley, Fred Harrison, Ray Dalio, Warren Buffett. Every single one of these different people are coming out every single month with different running opinions on what's coming next. But one of the best pieces of information I got in the last couple of years was in November last year from SQM Research. Now, in 2021 November, they released 4 different scenarios based on the government doing different things. Now, one of those things was if the government increased interest rates in the first half of this year, if inflation was between 4 and 6% for the year to date ending March to April, if APRA came in or the Reserve Bank came in and started to play around with things a little bit, their forecast for 2022 would look like this. So for the likes of Adelaide, Canberra and Brisbane, they're expecting plus 1% to plus 6% increases in pricing this year. For the likes of Melbourne and Sydney, it could be anywhere from minus 3% through to about minus 7 or 8% this year. Now, obviously these things are constantly changing. In March 2020, CBA and all of the other banks came out and said they expect house prices in Australia to go backwards by 30%. Between 2020 and 2021, they actually went up by 30 to 40% in both of those markets. So you've got to take everything that I say, that all of these analysts and banks say with a grain of salt, because in reality, there's only 2 things ever happening in the property market or the global economy. One is to do with monetary policy. It's either super easy to get money and money's easily available and therefore assets are going up, or they make money harder to get and assets pause or slightly decline. The other thing that's going on is sentiment. People either feel it's a good time to buy or they sit on the sidelines and wait because they think it's a bad time. Now, how many people do you know were sitting on the sidelines in 2018, 2019, 2021, waiting for this market that never came? Most of them have cost themselves between 20 and 45% growth depending on where they bought in Australia. Now, I've started off with a lot of the doom and gloomy stuff from the banks and from SQM Research, which when you actually look into it, doesn't look that doom and gloomy at all. if I could average 4.8% on my $1 million property for the next 15 years, it would mean that my property is now worth $2 million. I'd be absolutely stoked with that. I'm not expecting 10% every year. I actually hate years when it goes up by 30% because it freaks everybody out in the year or two after it. So it's not all doom and gloom out there at the moment. There's many different people and many different opinions. Now, one of them that I've been reading at the moment, got a great news and insights part on his website, is Simon Pressley from Propertyology. He does what I do, what Phil does, what Ray does, and that is go back and look at history to try and get an idea about what's going on in the future, because you don't want to miss markets when there's a buying opportunity. I know many of my clients took advantage of 2020. The last time sentiment dipped a little bit, for about 3 to 6 months, there were incredible buying opportunities where prices were down 10%, but they really weren't down. It was more because no one else was looking. So looking back at the history, between 2002 and 2008, interest rates went up in Australia 22 times, or by more than 3%. Now, during that particular time, prices in Brisbane went up 127%. Prices in Perth went up 147%, 139% in Adelaide, 66% in Melbourne, 26% in Sydney. Like, incredible result. If we look back, the previous cycle between 1984 and 1990, interest rates also went up many times. And in the majority of the markets in Australia, house prices went up by more than 100% as well. So when we think that there's this massive correlation between small interest rate rises and price declines, the statistics based on history actually sort of point to the opposite, because interest rates rising is actually a show of the strength of the economy. And if you look back on history over the last 50 or 100 years, high inflationary environments or environments where there's more inflation, property has always been a great hedge against that. That's why we're starting to see some of the crypto money come out. That's why we're starting to see some of the stock market money coming out and moving into property around the world, whether it's Canada, USA, Europe, or Australia. More and more investors are moving into that asset class because of that hedge against inflation. Now, Simon, in one of his recent blog articles, also went on to say that contrary to what the banks are saying, this is big. I don't know where I sit on this. In fact, I sit on the more conservative side, and I personally hope that property does sit flat for the next year so that we can buy incredible properties for our clients. But he's actually saying by the end of 2023, he actually thinks property prices in Brisbane could increase by as much as 35 to 45% based on history and the numbers and supply and demand and infrastructure and people moving here at the moment. He thinks in Adelaide and Hobart, it could be as much as a 20% increase, and in Canberra, as much as a 15% increase. Now, none of us have an idea of what's going to happen next, but it is good to get different ideas on this stuff. The last piece of information that no one is reading or listening to in the media at the moment is the likes of what the Phil Andersons, who wrote The Secret Life of Real Estate and Banking and looked at 240 years of American booms and busts, or the likes of Fred Harrison's, who looked at 350 years of UK booms and busts, are saying at the moment. And it's crazy to me that people aren't looking at these guys and figuring it out. Both Bill and Fred think that the real estate cycle is doing exactly what it's done previously. The next thing historically that happens before we get to the next like GFC style event, according to Phil and Fred at the moment, is easier money, a little bit of inflation, higher commodity prices. It's absolutely insane when you follow these guys, but they're not predicting the future. They're just looking back at what's happened previously. If you look at the interviews with Phil and Fred recently, both of them are expecting house prices globally. This is insane. From 2022 through to about 2026 to potentially in many locations increase by as much as another 50 to 70%. Simon Pressley has just wrote an article where he forecasts or thinks house prices in Australia in some locations could almost double in the next 5 or 6 years. There is incredibly good information out there that is very different to the fear that many of us are going through at the moment. So who I'm speaking to in today's video is not those of you that are going to sit out there for the next couple of years, wait for the media to tell us that everything's all good again, miss another dip like you did in 2022. The people I'm speaking to in this video are those like myself and the small number of clients that we work with each year that understand we've got no idea what's going to happen next, but maybe if you look at history, it's not going to be quite as bad in the next 2 years as some people might have you believe. And for those of you that can sit in that fear, that can moderate your emotions, that want to take advantage of a temporary sentiment dip in the market while the fundamentals of the economy in Australia look quite good at the moment. If we go on to look at what the RBA is saying, wage growth is going to be the highest in the next 2 years that we've seen in the last 15. Infrastructure spending between now and 2025 is the strongest in Australian history. We've got the highest increases in rents in the last 10 years. We've still, despite what the media would have you believe, right now got the lowest interest rates in Australian history. There's more savings in the bank than any other time in Australian history right now. The unemployment rate is at the lowest rate that it's been in Australia in over 10 years. There's so much good stuff happening if you look at fundamentals. We got people moving back. We've got the students coming back, which means we're going to have some people to do the labour and the unskilled jobs again in Australia, which would take some of that inflationary pressure off. They think that this inflationary period is going to be short-lived. So for those of you that want to take advantage of this type of market, I'd love to offer you a one-on-one strategy session. Please jump over to www.pumkedonproperty.com and book a session with myself, my brother Simon, where we can talk about where you are, where you'd like to be longer term. We can educate you on the market and give you all of this incredible information that we've gone and found. And then you can take that and you can sit there and just wait and see how things go. Or maybe you can become one of the small number of clients that we work with in the next year, 2 years, to take advantage of this incredible market. But either way, we want you to invest safely. We definitely don't want you to step into the market if you're in a vulnerable position at the moment. Talk to your accountant, your financial advisor, your broker. The banks are very conservative in Australia right now. The assessment rates are conservative. The deposit rates are high still. And the bank's balance sheets, because the cash that's on hand plus the value of their assets has gone up, look good. They're ready to start lending over the next 4 years again. We want the best for you. But as always, stay safe during this time and please invest with security and with confidence.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.